Hi guys, welcome back to another video on the NZ Day Trading 101 channel. I'm Shemi, and today I'm just going to share with you guys a few tips on how to trade in the NZ share market. So what I want to talk with you guys today is basically, what do you do if a stock gaps up by 20% or 30%? Is it something that we should buy or should we wait? So I'm just going to discuss this with you guys today. So basically, we're just going to talk about one stock that gapped up today, and this was PEB. So PEB gapped up today. I wasn't involved in this at all because it was kind of like an unexpected sort of announcement that I missed, but it's okay. And then what's happened here? So basically what's happened is, for quite a while now, so since, for around about 80 days, so probably nearly 2.5 months or something. So this has been in a consolidation, and today an announcement actually came out and it sent the stock flying around about 29%. So this is quite a substantial move. So basically what happened, so a gap up in the stock market actually means basically if it closed, let's say it closed at 99 cents and it opened at, let's say, $1 and opened at like $1.22 or something. So that means that it gapped up by, like 22%. That's a 22% gap. So this means basically it's opening higher than it closed. So basically that indicates that people are buying before the market even opens. And that is possible in New Zealand as well. So there's pre-market buying as well. And there's also a bit of an auction at the end of the day. So in the last 15 minutes of the day in the NZ share market, direct broking, a lot of brokers actually do like an auction, whereas so basically the people that have larger positions, they tend to trade at the end of the day. Because during the day it's not liquid enough and they're not able to get rid of their positions as easily. So yeah, going back to the gap up, so basically this one gapped up about 30%. Now, if it opened that much, what usually happens, I'll just go to the 5-minute chart. So let's see what happened here. Oops. So this is the 5-minute chart. So I don't really use like the 5-minute chart in the NZ share market because the NZ share market is just simply not liquid enough. So here what happened, it opened up at 122 and it went high as $1.30. And basically what happens, so even if you go on a 1-minute chart, so basically in the first minute of the day, it opened at 122, went to 126, and then, so basically, so if you go 10:51, it opened. So in the first 3 minutes of the day, it was already up from 122 to 130, but there's no continuation higher. And what usually happens throughout the day is basically after that little bit of a, people that actually invested at the start of the day here at 122 would have made about 5%. So you could day trade like this, but it's not something that I do. I tend to be more of a swing trader. And to catch something like this, you'd probably have to be on the phone with your broker saying, I want to buy this right now, put me in front of the queue. Yeah. So going back to the daily chart and discussing whether we should be buying at these levels. So basically after a stock has gapped up this high, it is natural for people to take profits because all the people that are invested down here in the consolidation stage, they're already up like 20% or 30%. So that's like nearly like a yearly return on a stock. So people naturally tend to want to take profits because they feel like, okay, we've made a profit now, and they don't want to hold longer. They want to just take profits. So that's why you see this sort of wicking action up the top. Because people, as it opens, so it opens, goes up a little bit, then it goes back down. So this just means that people are taking their profits. And the people that are taking their profits are probably the people down here. And people that are holding long term will probably stay in the stock, hoping that, for it to continue higher. Which it probably will. So that comes back to the, should we buy at these levels? So what tends to happen is chart history is a thing. So basically, if you go back to the chart history, you can always see what has a stock done previously. So here we've seen a gap up, and what's happened after it gapped up? It went higher, it held held like about 75% of its gains, and it's just kind of consolidated sideways for a while before continuing higher. So the similar thing could happen here. So what could happen is basically, it's gapped up higher. It could basically consolidate for a while. It could go back down. And then when it's ready, then it'll probably start to shoot back upwards into an uptrend again. I could be wrong because you don't really know what's going to happen in the stock market. The only thing you can really do is you can take your best sort of approach by basically analyzing, investor trader behavior, and you just put together a theory and you just stick to, is that theory going to work? And if the theory is not going to work and this doesn't go higher or this goes down, then that's why we always cut losses. Because at the end of the day, no one can predict the future. No one knows exactly for sure what's going to happen. I mean, investors are going to hold, and people down here, they made a 30% return. They're going to take profits because that's just a natural thing to do. So anyone invested here, they would have probably took their profits today. They were like, oh, yeah, we're up 30%, I'm out. So people don't care what happens after that. So expect some sort of consolidation, then probably a move higher. It could keep trending downwards and then probably going higher. So basically, you don't know what's going to happen. So it'll probably form a bit of a range. It'll probably bounce around the range for a bit, and then it'll probably finally start to trend high. But you don't know when it's going to do that. Cool. So basically, buying these, I'll probably wait for some consolidation. If you want to buy, then yeah, you can buy. That's all good. So this is basically earnings now. So PEB doesn't always show the earnings. I just got to put my volume back on. Not sure why that's off. Whoops. Also, I like to have a moving average on my chart as well. Cool. And so I'll just adjust this. Moving average. I personally like to use like a kind of like a 5 or 7 day moving average, something that shows me sort of a clean trend. So that basically shows me, like here you show that the volume sort of increasing. So that's what happened here. The volume was increasing and increased, but it just, as the stock was going down, it was going down on low volumes. So that kind of shows you as well that, is there buying? So in order for buying to be present, there needs to be volume. If there's low volume on the downside, so as you saw the stock kind of going down here, you saw smaller red volume bars. That means that the stock still has some juice, so it's still ripe and can continue to go higher. So that's another sort of tip. Going back to these gap ups, we also saw a gap up in RAK, I think about, they had the earnings announcement on this day here. You saw a huge volume buying. I'll just kind of remove my drawings. And again, it's kind of gapped up about, I think it gapped up about 10, 12%, and it's just gone back down again. So that's natural as well. If something's gapping up, the long term, the people that are kind of buying in here, they see a sudden gap up, it's natural to take profits. So here we see, low volume selling. You saw some big selling here after 20% gap. You just saw people, starting to sell as well. So the best sort of stocks that are going to probably continue higher is this sort of orderly price action here. See how there's these little sort of little candles here. The littler candles and more orderly the candles are, the more chance of it continuing higher. When a stock starts to really expand like this, as you can see from here, there's going to be a pullback at some stage. Simply because investors, traders, they're all happy with the gains. They're happy that they made they're probably up like $1,000 or something, and they're probably like, yep, I'm just going to take my profit, I'm out. Or as soon as they see a bit of a dip, they're going to all get out at the same time, and that's why you get these huge red volume bars here. Simply because everyone's selling at the same time. So the whole stock market is about, human psychology, human behavior. Are people buying, are people selling? Like, it's just natural, they have people with the stocks going sideways here for ages, and it just gaps up, about 20, 10 or 20% or whatever. They basically, excuse my sort of drawings here. So if it gaps up by 20%, these guys here, probably about 50% of them are probably going to sell because they're happy with that 20%. And they probably think that, hey, look, that's up 20%, it probably can't go any higher. And then when it is up 20%, people are probably waiting for a bit of a pullback to buy it. So when there's a bit of a pullback and there's a green candle to hold, and you see some sort of large volume candle down the bottom, then that's a good area for people to kind of buy. and then they'll start buying. So that's sort of the second wave. So the stock market moves in waves, especially off like a big move. So usually there's a big move followed by some selling, then another big move followed by some selling. So this can be sort of so this is why we get the, you know, these sort of zigzaggy sort of lines. So these ones here, just drawing a rough sort of thing. So this is also like I think there's things called Elliott waves and stuff like that, and ABCD pattern kind of thing. ABC, yeah. So basically, see, this is how technical analysis works. So I'm very simple with my technical analysis. I just trade a few things, and that's all I like. I don't trade too much, because if you trade too much, then you don't know what is actually working for you, and the probability of you like being successful in your trades goes down as well, because you're just trying and doing too much. So you got to make sure you stick to just your own sort of strategy that you want to implement. Cool. Sometimes you can have gap ups where they finish a lot higher. So this one wasn't actually a gap up. Again, like in REC, this one was an orderly sort of flow upwards. So this is good. Here a gap up, and then it was followed by, you know, this is kind of, you know, that something kind of rounding off like this is probably ready to continue higher as well. So many different ways you can trade the stock market. I hope you guys are probably finding some good techniques and, you know, good tips. Like, you got to remember, like, one tip of trading, especially like what I've learned from my trading, is basically the trend is your friend. Trade with the overall trend. That's the overall trend here. You can see clearly, like, it's just an upwards trend. Like, anyone can map that out, and you're basically just trading in between all this like stuff here. So I mean, the long-term investors are happy because this is going to continue going up. Same as PB. The reason I don't invest long-term is because I want to be catching those short, you know, I want to be catching the, you know, these moves here. I want to be catching this. I don't want to be stuck with my capital for days for ages, you know, because I could be using that to be trading other things and making more money there. So again, this is sort of an uptrend. This is having good, you know, like it's gone up like this, consolidated for a while, it's going up again. This is probably going to continue to go up. It's probably going to go up to $2. When's it going to go up to $2? We don't know. So it's going to continue to like trend upwards. So people that want to invest in this, then, you know, great, that's all good. But for me, I want to be trading certain patterns. Remember, the overall trend is probably the best. Like, you don't want to be trading in, sorry, I always pick on A2. You don't want to be trading downtrending. So this has a clear downtrend. You can see that. Why would you want to be involved in this? And this is where people lose money. They start to go for stocks that are downtrending, expecting a reversal. Like, I'm going to tell you guys right now, don't expect reversals. In order for a reversal to occur, you probably need like a pretty clear trend, like a pretty clear reversal. You probably need like, you know, some consolidation here, probably another one, and then that's kind of forming a reversal. You can clearly see that's a reversal. But right now, there's nothing for A2 to reverse. Warehouse as well, like this is something basically that not all the time a trade is going to work in your favor, and that's why you have stop losses. Even warehouse, you know, is like a kind of a you know, clear sort of uptrend. You'll think it's going to go higher, but sometimes it doesn't work like that. Even with the earnings announcement here, we sort of, you know, increase in volume. We saw a gap up about here, but and then we saw it kind of climb up again, looking like it's going to go, but that always, you know, that doesn't happen all the time, and that's why we cut losses. So if you were to cut your losses here, then you're fine, and you would simply just move on to your next stock. Sorry, you move on to your next stock. So that's how you'll do that. Cool, sweet. So I'm not going to do too much editing on this video, because you know, spent ages trying to edit videos and stuff like that. It's just, yeah, I thought I'd just, you know, stick it on straight, you know, put a few little captions here and there, and yeah. Right, sweet. Thank you for tuning into my video today. I hope I taught you a little bit about like you know, gap ups in the stock market. This doesn't apply to New Zealand stock market only. It also can apply to like you know, US stocks or Aussie stocks or any stocks in general. And the principles are all the same. Except, you know, when you get more and more experience in the stock market, you start to see certain things. You need to put those watch hours on a chart. So basically, the more hours you spend looking at charts, the more it'll start to make sense to you. And it does happen within time. Just, you know, just look at charts on your phone, on your computer, any sort of spare time you have, just look at charts. See if you can find something that consistently happens over and over again. And if you do, and if you can manage your risk and you put your targets in place, you can manage your emotions, you can be a very successful trader. So yeah, I believe in every single one of you guys trying to trade, because it is possible. I mean, if I can do it, then anyone can do it. Simple as that. Like, basically you just need to have the correct knowledge, and if you don't have the knowledge, it's going to be a lot more harder. You need to basically learn about it. You know, heaps of YouTube videos. I've got a course as well, and basically there's so much things you can do. So yeah. Alrighty, I'll see you guys for the next episode.